Last Thursday, it was announced that Facebook will be added to the S&P 500 on December 20th. While the media reports were generally upbeat, it remains to be seen whether or not the move will ultimately help or hurt the social network stock. I'm John Maxwell with the Motley Fool, and my analysis of the performance of recent additions to the index suggests that this is good news for Facebook shareholders. Of course, for many investors, this probably seems obvious. When a company is added to the S&P 500, its shares must be purchased by funds that track it. And when you consider the size of funds tracking the S&P 500, that adds up to a lot of increased demand for Facebook shares. However, when you really dig into the numbers, it's not as clear as you might initially conclude. So let's go through them. Let's start with the SPDR S&P 500, which is the world's largest exchange-traded fund. It has $165 billion in assets under management. On top of this, when you add the other two major ETFs that track the index, you're looking at a total of roughly $230 billion. Now, let's be clear. This is a very conservative number because it excludes other funds that may buy Facebook as a result of this inclusion. But even if you double the figure, in terms of the net impact on demand for Facebook stock, that equates to roughly 2/3 of $1 billion new dollars that will need to be invested in shares come December 20th. This, by the way, follows from the likely weight of Facebook on the index itself. Of course, that sounds like a lot of money, but here's the thing. It pales in comparison to Facebook's market cap, which is currently in the neighborhood of $130 billion. In other words, at the very best, the increased demand is likely to equate to only 0.5% of Facebook's total market cap. So as you can see, this isn't much, and it's certainly not as much as you would assume before going through this exercise. Now that being said, I still believe that Facebook will benefit from the addition. Of the, by my count, 14 companies that have been added to the index this year, they've outperformed the index itself by roughly 3% from the time they were added to the end of last week. Now, to be fair, of those 14 companies, 5 of them did underperform the S&P 500 in the subsequent months, but that still suggests the odds are in favor of outperformance. It's for this reason, in turn, that I'd say the chances appear, at the very least, to be tilting in Facebook's favor for the foreseeable future. Now that that's out of the way, I apologize for all the math. Again, I'm John Maxwell with the Motley Fool. Be sure to check back in with us at fool.com for more investing insights and commentary. Thanks for watching.